What's going on, everybody? It's your boy FOREXFUNDED here. As always, the links are in the description. My Discord room, my Instagram. You can get all my trades, analysis, all kinds of good stuff in my Discord. But this is going to be a mixed lesson. We're going to go over range points and fib. I made a video about this a while ago, but I deleted it because I don't know. But we're gonna go over fib, how I use it, the fib values that I use, and we are gonna also go over the range points that I use on gold. So we're gonna start with range points because that is the easiest and quickest one. So as you can see, I have a bunch of lines on gold starting at like 1,000 and going all the way up to 4,000. Gold likes to move in $160 ranges with quarter points in between, right? So if you have a range and you have a quarter point, there's going to be 3 lines in between. So the thick lines that you see are the $160 ranges. So here from 1975 up to 2135, that's a full range, right? You can go back all the way to here's price trading, in the thousands, and you can see, right, they're not going to be nothing that you do trading is ever going to be perfect, but you can see there is immense respect for range points, for our big range points, your midpoint magnet. So if I were you, what I would do is I would go to current price, and I mean you can go all the way from 0 all the way up to a billion, but I don't see price trading below 31.15 anytime soon. So you could start with 30.95 and make a big thick line, and then every $40 you can make more lines, right? On the fourth line, it will be a thick line, right? Because that is your $160 range. You can do that going all the way up to 5,000, whatever the fuck you want to go to, right? Just copy all you know. The only number that matters is the first number that you start with. Start with a big range point. So whether it is 30.95, whether it's 32.55, whether it's 34.15, whether it's 35.75, doesn't matter. Those are the big $160, and then your quarter points are $40 in between, right? So as you can see here on gold, for example, in our most recent price action here on the daily, after this big $540 push up, we found resistance at a big range point, and then we pulled back to the previous big range point, right? You have a big ass move that just doesn't really care. That was I believe that was the Israel war. Israel, or no, not Israel. Yeah, it was Israel, right? Now you can see we consolidated for the most part in between that $160 range of 32.55 to 34.15. Right? You have a couple outliers, which we'll get into this with their fib, but for the most part, you consolidate in between it, and then once you're ready to break, where did you first go? You went to your next range point, your next $160 range point. Now, the way that I like to use them is there's a couple ways, right? So the first thing that I like to do is I like to see where we are in relation to the weekly chart, right? For the most part, if you're looking at a higher time frame range, meaning $160, if you close your weekly candle above the midpoint, in my opinion, you're more likely to see up before you see down. Obviously, there are times where that is not true. Right here, you closed above your midpoint, but the next week you saw down before up. That's just one thing I like to think about, right? That's what how I like to use them. Here is an example where it's kind of tricky because, in 2 weeks you went all the way down, you closed below it, but you did tap it. The week after, You closed above the midpoint, so then you would say, okay, I think we're going to go up to the top end before you go down. You saw that. Here, after you touch down low, you closed above it, you're going to go up before you go down, which is what you had. Obviously, there are going to be other clues in price action, but that's one thing I use. For instance, current price action is big weekly candle, $138. I can't say we won't go down before we go up, but we closed our weekly candle higher than we ever have, just like here, higher than we ever had, and we closed it above a fresh $160 range. So now the range we're going to be trading in is this 35.75 all the way to 37.35. It is my opinion that we will be trading inside this range and that we won't just fall hard and stay here, right? We might fall hard to pull back, but we're going to be instantly picked back up, in my opinion. So with that being said, my TPs as a trade or look for some pullback, or say you're above it and you're looking for a pullback, would be any of these lines, right? 36.15, 36.55, 36.95, and 37.35. Now, going back to the daily. I mean, this big bullish isn't really, there's not a lot to talk about, but what you can say is when you close above it, you're going to be when you close above this big range point, you're going to be expecting price to continue higher. You got to use other clues in price action. So for instance, you made a fresh higher high with that close. You closed above the prior lower high. Then there was also, which we'll get into, there was a fib pullback right here, right? You came into that golden zone. So when you close above it, you're going to expect price to go higher. When you see price in one day go from this beginning of a $40 range, taps the end of the $40 range, but closes below it, you're not going to say, oh shit, we're going to sell off hard. You just say, you might want to be a little cautious. But then when you close above it, you can't, how do I say this? It's not always going to give you a trade just because of a range point. You shouldn't trade just based off of range points. You can go to a lower time frame and say, okay, well, we had NFP, which gave you a nice $30 move above the big range point, and then you started to reject the same range point, right? You could have gotten an entry anywhere here because you're expecting to go above it, right? That's what you did. But yeah, that's basically how I use them. I use midpoints mostly on the 160 range. You can use a midpoint in between a $40 range. So if the top is 34.75, 34.55 is going to be your midpoint. 34.55 is going to be your midpoint, and you can see that you had support here, you had resistance here, and then once you start breaking these highs and going bullish, you're still using it as resistance, but you can see it'll trade in between it, right? It'll use that. It likes to use it as support and resistance. Another thing that you can often see is here you have, bullish price, which didn't touch the top end of that range, right? So you can incorporate something like a fib, or you can also look at where would be the midpoint of this. 34.55 would be 34.75, right? 3475. Now see if it lined up, right? You can see price ended up using that area as support. You can do the same thing with this one. 34.95, 34.05, 34.15. So 3515 is your midpoint. Now we'll talk about those here in a second. So one thing that you could be looking for is, okay, price went pretty big bullish, right? You already have the bullish bias from a higher time frame. So you could look for some pullback and look to see if that midpoint area is going to give you some support, right? You're pushing up, but you're coming back down. You made a higher high, which means you're going to come for a higher low at some point, right? You're going to want to leave a higher low in some form. You're going to want to try to use fib in some form. So maybe you wouldn't have bought here, maybe you wouldn't have bought here, but once you see that, technically speaking, this is your lower high, that once you break it, you want to start looking for buys. You could put a fib. You could also say, oh, we're at that midpoint, which we know likes to, act as support and resistance. You could have hopped in. You made a higher high. You weren't able, to stay above it. So you come back down to the same level, right? Here's another example, right? Once you finally broke above that level, you can see initially you did not come back for it, right? Then you came, well, we'll just put this one here too, 35, 45, 55, which we already had marked. So 3555 is their midpoint. You can see as you expedited up, you kind of retested it here. Once you tapped that high end of the range, you fell to it, used it as support, then finally broke to it. And then where did you fall, right? You fell straight through a range point and went towards the midpoint. Literally, your bodies are higher than that range point, right? So you guys can add these to your chart. You can use them however you like. I've just told you how I use them. I mostly use them for profit taking areas or areas of support and resistance. I'm not the type of person who's gonna say, okay, well, we just closed above it and we're bullish, so let me buy here this candle with my stop, wherever you would say you want it, right? Based on however you trade. Okay, well, this is just a slow ass range. So that last powerful candle was here. So let me put my stop here. Let me target the top end of that range. Whatever you want to say. Okay, that would have worked. I don't trade like that. There's a lot of ways you can use it, but I just basically look for, like I said, we're above this range. My next big target is going to be 36.15, and I'm ideally going to want that to match with some fibs, which is what we're going to switch over to now, how I use my fibs, right? So this is current price action. Obviously, we know. So that big NFP push up, the fib I currently have is from the most recent higher low to the highs. I will be looking, normally I look for a golden zone retrace. In this example, which is not the best, I do think we are more likely to see a 786, but I'll take a 50 or a 61 if we get it. The reason why I think it's kind of more likely that we tap into here is a few reasons, right? You have a no wick candle, which is basically just a gap from the NFP candle. You have a 1 hour order block, which is a smaller one, and a 4 hour, I believe it is, a 4 hour. It's a daily, actually. You have a daily bullish order block, and you have a 1 hour order block and a 4 hour order block, all in that area. So there's a lot of reasons why you would come back there and retest it. But that's how I would use the fib, right? Normally, if there wasn't all of these confluences lower, also, if you look at what the higher time frame, right? You're trending, here is your higher low to your high because there is a new high established. That's the best time for you to use a fib, in my opinion, is when you have your trending in price. Because all we're using fib for, if we're going to take it at why would you use it, is to try and catch a higher low or a lower high when you're following trend, right? Price moves by making higher highs and higher lows, higher highs, higher lows, higher highs, higher lows. I don't like to consider this a higher low because it's not, right? It's just consolidation. This is your higher low. You try to catch that, right? If these were your higher lows and this is your high, there you tap into your golden zone and you look to target your Fibonacci extensions, right? Which, like I said, they're all the base levels that you get on a fib. None of them I've changed, right? Which, as you can see, right, it tells you that next target for this buy, your target would be 36.08, right? So that gray box is the golden zone from the big fib, which is the other reason. There's like, 4 confluences for why I think 78, a small 78. So if you guys hear me reference on a small fib, it's because this fib is smaller than the bigger picture fib. Simple. Now that will give you 2 targets, right? Your smaller first extension is 36.15, which matches the range point, which is what I mentioned. I like my range points to match with other things. You don't have to, but I like that, right? Then your bigger fib would be 36.24. So my area that I would be looking for would be that extension to this extension, right? That big zone, too big, but whatever, right? Then my second or third TP, however you want to look at it, 36.34. Think about it, right? What did I tell you? You can do midpoints of the 40 ranges too. So if our range point is 36.15, that means 35 would be our midpoint. Matches up with that fib, right? Then you have your 100% extension and your 61% at the same fucking price at a range point, right? So that's what you want to be seeing. That's how you use it. Obviously, look, there are a lot of ways to use fib. There's not one specific way to use it. The only thing you need to be doing is picking proper points to use fib, right? I see a lot of people who use fibs from very weird candles that do not make sense, right? It has to be, in my opinion, a higher high or a higher low. Right? I got to take that statement back. It does not have to be that. If you're in a bullish trend, you want to use your most recent, so here, your most recent higher low to your higher high. You don't want to say, okay, well, here to this random point, right? Because there's people we know that do this and it makes no fucking sense, right? But what you can say is you don't need price to have broken a structure high. So for instance, this is a structure high. This is your structure low. You can get fib from inside of here. You don't have to use this fib. You don't have to wait to make a high, right? In my opinion, those are more risky entries, but you can, and I'll show you examples, right? Because here's an internal structure of just sideways. Within this internal structure, here is your high. Well, it's a fib. God damn. Here is your high, right? So once you break that high, even without a body, once you break it, you're biased. If you went from trying to sell or neutral, you should say, I should be looking for buys. So with that being said, look at your most recent higher low to your highs, and what do you have? You could have gotten in at 50. You could have said, I don't want to get in here because it's 215. You could have said, I want to wait for New York, which, if we're going to be honest, since it was an NFP, you probably wouldn't have gotten in. But that would have been your bias, and this would have worked, and you could have used all of these fib extensions for your take profit levels, right? My 80% of the time, what I do is I look to enter in the golden zone with my stop loss below 78 by about 20 to 30 pips, depending on the size of the fib, right? If a fib is bigger, right, this, for example, you might want to allow a little bit more room. If it's a smaller fib, like here, you might want to, I don't need 20 pips, right? Now, obviously, if you're looking at this exact fib and you were to have gotten in at 50, right? Your stop would have been, whether you moved it or not, you would have said, okay, well, shit, we came back into it really quick, but there's not an immense sell pressure. To me, this is not immense sell pressure. These are small candles, right? This is immense sell pressure, right? And look, there's nothing to hide from. We tried to buy here, right? I saw this massive rejection of a level, right? So from your previous, I don't remember honestly if I did, I think I did this whole entire consolidation, which is what, actually that is what I did. I did, because this is just consolidation sideways, I did the low of the consolidation to the high, and I saw the 50 fib rejection. I didn't get in immediately, right? What I had did is I was on a 5-minute chart when that had happened, right? Which it's right here. And I said, okay, we could get a little bit of pullback because we broke the high right here. So we got in at 50. We got a nice rejection. So I put my stop at 52, right? Because it's the newest fib we're using for our entry versus, that's just going to have to work, right? Versus having it all the way down at 786 below it, right? Because if it's not time to go, it's not time to go, regardless of how price action is working. Now, what happened, right? It worked perfectly until it didn't. You have big sell pressure here straight through the 61. So we took a loss here. There's nothing for me to hide from. And then you just saw that immense selling pressure here. Not a lot of sell pressure, but then here when you have these big fat red candles, that's sell pressure, right? You have to be able to just kind of say that. Like for instance, this shit right here, not real big buy pressure. Not big buy, not big sell, not big buy, not big sell. Big buy, big buy, big sell. You look at the candles. If they're all kind of small, that's just fuckery. But then when you have big fat red or big fat blue or big fat blue, you just know. You don't have to have a fucking volume indicator for you to use your goddamn eyes. Simple. So what was I saying? Like I lost my train of thought already. That's crazy. Yeah, so all I was trying to say is how if you miss an entry, you're not supposed to beat yourself up over it, right? For instance, if you say, oh shit, I missed my 50% entry, it's not uncommon for you to come back and to tap 78. It's also not uncommon for you to say, okay, well, shit, I missed 50, I missed 78. What the fuck? I missed my trade. No, I didn't, because all you got to do is look at structure. Now, this is getting into more of scalping territory, right? But think about it. We've been bullish since you broke this high, right? Since we broke this high right here, we're bullish. Where is the higher low that we've been talking about? Here. So you're bullish until you break those lows right here. So none of this shit matters, right? Technically, if you want to be 100% safe, put your stop loss down here below it. But I normally use 786. But getting back onto the train of thought we're doing, right? Okay, say you're saying I missed it. What I'm trying to tell you is there's always going to be, not always, a lot of the times, 60 to 70% of the time, if you miss your initial entry, just wait. Here is your internal structure, your most recent lower high from selling pressure, right? This is a sell pressure. Then you're just fucking around. Then still not really any sell pressure, which is telling you want to round out. Here's a high you broke. You broke it here. Go from your lows to your highs and look for the same fucking thing, which you have. You didn't tap 78. You just stayed in 50 and 60 golden zone. If you wouldn't have gotten in here, but you would have said, fuck, I'm missing it. Next time we come into 50, I'm buying it. You got it the next candle. You got it the next candle. 3 candles in a row you could have bought with a stop below 78 or below your 100%, and you would have made a shit ton of money. Obviously, this isn't the best example, like I said, because this was NFP, and it's not advisable to enter a trade the hour of NFP. Pretty fucking stupid if you ask me, unless your goal is to be a gambler for news, right? Nothing wrong with that. It's just that to me is not trading, right? There's no way for you or me or anyone to know what's going to happen with gold when there's news, right? We can make an analyzation for why we think price is going to go bullish or bearish, but at the end of the day, it's 50-50. It's a gamble. It's the same thing as playing roulette or blackjack in my eyes. Versus non-news events where you say price is trending, so if we're going to continue to trend, we'll pull back, right? Same thing, like right here. This is what we talked about, but look, here's highs, lower highs. Same fib area you could have used. It's easy. It's really fucking easy. Now here, look. Here's what we're going to do. So, yeah, so whether or not we get 786, whether or not we get 50, I could give a fuck less. Because even if I miss it, even if price action is really fucking shitty, if we come and we get sufficient pullback, wherever it is, once we start flipping price action, you have valid ways to enter, right? Because if we're going to be honest, even if it's a straight, the only way, I'm not going to say the only way, but ideally this isn't going to happen in 2 minutes, right? There's going to be some sort of structure forming where then, boom, you break that structure and you look to get in. That's just how you're going to end up using it, right? So then when you break lower high, you'll put your fib in and you'll say, oh, okay, I know what area I want to look for. The one thing I will say, I kind of should have started with that. Normally, if I'm being honest, on 90% of my fibs, I don't use 38%. I don't like 38% more often than not, unless it's a giant fucking move, right? For example, The only other fib I had that matched here was a weekly fib, right? And that is where you did respect 38, right? So on a massive fib like that, like a fib that goes over $100 even 50, more than 50, you can use 38, I guess. I just don't like it because at the same time, if you use, right, high, higher, low to highs, boom, 50%, right? You can't, in my opinion, use these lows as a fib because it did not make any kind of pullback, right? It just stayed sideways. You did not complete a 50 fib. You did not even complete a 38. So this to me is not a high or low. It's just the end of the session, right? 14, which is 2 p.m. Then you have 18. So this is your last candle of New York. This is your first candle after the market opens. Just ran out of steam and then continued up. You got to look at the entire length of the move, right? To be fair, using that same analysis, this also, using that analysis I gave you, did not complete a 38. But what you have to think about is, okay, we left a higher low, and then we just rocketed it up, and we stayed sideways. We rocketed it up. Even then, if I'm being 100% honest with you, I didn't have this fib. I did not have a fib from here to here. I did not. I had a fib from our weekly low to the weekly high, right? And this is your weekly low. And you can see, as I mentioned, that's a time when you would use a 38 because the fib is what, $130? $140. That's a time when I would use that fib. And those are the type of things that it's hard for me to teach. It's hard for anyone to teach. I don't have a set defined rule list for when do you use a 38? When do you use 60? When do you use... It just comes from experience and me looking at the market and saying, well, what does it look like it's going to happen? Like here, we managed to take a bunch of entries over here, and there are almost all 15-minute entries that just came from fib and have traded fib for so long. Like, look, here you're not sideways, you're still trending bullish, but it's a lot of chop, right? So we might as well just analyze this whole entire fucking trend. Not the whole trend, but we're gonna start at the reversal, right? So no, in the last video I did, I think I started here. Because otherwise you just keep going back. It's the same thing, right? You have a big bearish move. Obviously, at some point you're going to reverse. You can catch a reversal easy if you use fib, in my opinion, because you look for the same thing you look for, which is pullback, right? You come to a bottom. We're not going to get into why this would be a good bottom or why it wouldn't. We're going to get into the fact that if you put a fib from here to here, which you would have done even if you were selling, because you would have said, I don't want price to reject 50 or 61 if we're going to go bearish, if we're going to continue bearish. Here you reject it. Then you push up. You break your lower highs. So say you missed the first round because you weren't confident price was going to flip bull. That's fine, right? You got rid of that fib, but you know that's a good one, right? You say, okay, I missed round one, but round two, if we can pull back and respect golden zone or 78%, I would love to get in. What did you do? You tried to respect 50%, and then you broke through it and you tapped 78 and just started rocketing, making new highs. So this is when you're flipping from your bearish pullback to bullish. This is also why I like to put my stop loss below 78 by, I'm just going to call it 20 pips. Sometimes it's 15, sometimes it's 30. It depends on the setup, but the only way you will know my stop loss is if you're in my Discord. But here's an example where it don't matter what the fuck happens. Say you would have bought 50 because you saw the rejection. Your stop loss 20 pips below 78.6, which is 83.68. 83.68. Boom. You would have got in that trade. You would have had some drawdown, maybe 60 pips of drawdown, but then you would have hit whatever target you're looking for, right? You would have hit 27 for a 2. You could have held further. This actually was news. This was another NFP, right? But yeah, you would have held it, right? So that just tells you how you can. That's basically how you can catch reversals properly, right? You just look for price action to change. Okay. So what happened after that? Not a lot, because if you're using your higher lows to your highs, nothing. I mean, 38, but we don't like that. Nothing. So after a while, you just say, okay, price doesn't want to pull back for now. And it really never touches that fib, if I remember correct. Oh, no, actually it does, right? So it just takes a while. You can see here it touches it and tries to go, but that's already the end of that trend has already been completed, right? Because if you look at the grand scheme of things, that big bull move just went and touched 786, right? So you would have had reasons why you're trying to sell. 786, boom. Which I guess I should have talked about. This is hard to try to analyze it because there's so many more factors, right? Like, for instance, since here to here, we've been sideways and we knew we were sideways. So, and this is the move we're talking about. You're just making lower highs and higher lows until you are ready for the big break, which is this, which is what I've been teaching and talking and preaching in my Discord for the past 2 fucking months, right? So back to the 1 hour, right? So with that, let's just say, okay, this bull move, no one in my group or me was ever expecting it to break here. I wasn't expecting this break to happen until FOMC. But the thing is, the probability of the rate cut happening is so fucking high that the market just priced it in, right? The big boys said, I know what's going to happen. I might as well price it in now. So that's what we've seen, right? Right? We're consolidating, right? You can say the same thing happened here, right? Or the same thing happened here. You did not make a lower low. So after this pullback, at some point before you want to even try to break this, you want to make a lower high, right? So I said I wouldn't go back this far, but here I am, right? First, what do? You tap 50 and you get maybe 100, 200 pip sell off. But you don't break anything crazy. And then when you do, you bounce up higher. Then you finally pull back, which probably to some fucking fib level, right? Probably the golden zone or 786, right? What do? 50 and then like 200 pips. And then you fall lower and then you go all the way back, right? That's why I say it's hard to go back and back test the strategy with every single entry you could do. All I'm trying to say is all you're trying to do is make a higher low here. A lower high here to keep the structure, right? As I said a million times, I'm not a teacher. I'm a fucking trader. I just explain what I see. That way, hopefully, it helps you guys. Now, back to this fucking scenario, right? Where is it that we got active, right? We got active after realizing that prices just ran away from you, which, look, this is a good example because this was last NFP. This is very similar to how we closed market this week, right? Obviously, it would have been nice if market closed like here. It would have been exactly the same. But it's very possible that those pullback zones I set out for us for this week, we might not see, right? We might see something like here where you just establish a bottom and then you make a higher high and then a higher low and then you don't, but then you do. So there are multiple areas. Actually, I like the 1 hour better on this. There are multiple areas where you would be able to put a valid fib, right? The first entry that I got into on here was over here, right? I didn't collect none of this because I kept thinking it was going to go lower. But when you have a big sell-off and then you make a whole nother high and you don't break any of these lows, like I say, you got to think of the full move. This bullshit is just to go higher. To me, this is your higher low. This is your fib. You 786, you broke it. If you would have bought here randomly, you would have hit a stop loss. Boo-hoo, right? But you could have said, okay, well, here's our high. Here's our low. Fib, 786 with a rejection candle. Buy it to wherever the fuck you want, right? Range point, inverse, or extension, whatever. Okay, cool, right? How I got active was you're making high, higher, low. You make another high. I say, God damn it, we gotta just start using these fibs, right? We gotta start using these lower time frame fibs. So I had that fib pulled out, right? I believe in this example, I took my first entry at no, actually I didn't because it's 3 a.m. I wouldn't have bought at 3 a.m. I bought somewhere here like anywhere from 6 to 8 after seeing you reject 786, right? So we'll give us the worst possible price and we'll say at 9 a.m. open, and then with the stop loss about 20 pips below 58. And then I'm going to be targeting my negative 2.7 on that specific trade, right? Takes a while. You come back to entry, but you hit it, right? Now, same time, you can also say, okay, technically speaking, if you're looking at the structure of this pullback, you have a high, you have a lower high, you have a lower high. But what happens? You break these lower highs right here with this candle. So what is it that you can do? That's right. You can pull a fib from your low to the high that you broke. You can slide that bitch over. Normally it's like 305 where I put it, because normally that's far enough away. But since it's back in price, it's not. You can say, okay, shit, look. Golden zone, holding, stop loss below 786. What time is it? This is just after market opens. So market opens here. You're just chilling. Boom. If y'all in the Discord, you know 9 p.m. Eastern time is power hour. Is one of our power hours. Here's 9 p.m. right here. 2100 is 9 p.m. Boom. Power hour. Made a fresh high. Could have done the same motherfucking thing once again. From your low to your high. Golden zone up. Right? Boom. There's a shit ton of fib entries you could have used however you'd like to use it. Right? Now, say that you missed the reversal, because as I said, all this was doing was leaving a lower high, and then after you leave a lower high, you're going to say, well, this left a higher low, so we're still in that big bull flag pattern, so this should leave this. When you see it reverse, it should not break the lows. We don't expect it to, because we had additional fundamental analysis, higher time frame trend analysis, all that type of shit. So first thing you would do if you see price starts expediting down and then breaking all of these lows is you're going to pull out a fib from your low to your high, and you're going to say, I believe. You got to make your storyline, your narrative, which I already have a video on. You're going to say, I think price is going to attack one of three places, which is 50, 61, or 786. I was looking for 50%, to 61%. I did not get in initially for multiple reasons. Well, technically speaking, I did buy 50, and I got out early because of just look at the messy price action. It took a while. And then what did I have to do eventually was I had to wait for the proper reversal, which technically price flips right here. Here's your lower high. You break it from your low to your lower high to your lower, from your low to your higher low, from your low to your higher high. Excuse me, fib. There's an entry point. There's an entry point. Both are lots of fucking pips, right? Say that I completely missed this reversal. We'll go back to that, right? Say you missed this reversal. Okay, cool, right? From your high to your low. I don't like 38. I wouldn't have taken that. I'm still using my high because 50 has not been touched. To my low. Oh, what is that? 50%. What is that? In the middle of it. Stop would be up here. Did you hit the full TP? No, you didn't. But that's like 400 fucking pips in 8 days. So who gives a shit? Somewhere in there you would have taken profit and you would have made fucking money, right? That's how you trade a reversal. I don't give a shit about all this bullshit, right? Say that you didn't get an entry here, and then you say, oh, wow, I'm slow. Price went bullish. Now, okay, before I get ahead of myself, this left a lower high. This left a higher low. What do you think is gonna fucking happen, right? You think, oh, I'm gonna leave another lower high. Because in my opinion, me personally didn't expect this big break to happen until FOMC, or at least closer to FOMC, meaning this coming week, the week of September 7th, or even the first. Honestly, yeah, it would have been next week. I would have expected it, but that didn't happen. But my target for these trades would have been the fucking. Oh my god, my mouse died. No. Oh no, my mouse died. Okay, hold on. I got another mouse here somewhere. Sorry. Okay. That was very embarrassing, not gonna lie. Oh, this mouse is looking nice. Oh shit, I like this one better. So, technically speaking, you would have been targeting 50, 61, or 78. Okay, all I'm trying to say, that's what you would have been targeting. But say, like I said, you're like, oh my god, I missed the move. What do? The same fucking thing over and over and over and over and over again until you perfect it. You don't need a million fucking strategies, right? I might talk shit on ICT because I think it's fucking retarded, but I will give it to them. They do. If they're good ICT traders, it's not because of their concepts. It's because they trade the same fucking thing every single fucking day. They don't give up on it, right? That's what you got to do with whatever the fuck strategy you use. The same fucking thing. The same fucking thing, right? Here is that one example where I said you hit that midpoint and you just shot up. So me personally, I had a buy limit here and I missed it. This candle happened because Trump said he was firing some Fed president. Fucking funny as shit, right? But I missed that, right? Not gonna lie, I missed it. A couple people in the Discord hopped in. What would I do though? I would say, okay, this is a higher low. This is a higher high. Oh my god, it's like I understand what he's going to do. He's going to put a fib from the low. Oh my god, he's going to put it, oh my god, to the high. And oh my god, he's tapping 50%. And I had a buy limit here and I fucking made my goddamn money. And I got up the market, right? Oh my god. What is he going to do now? Oh my god. Wait a minute. He got in at a perfect higher low. And we made a higher high. Oh, he's going to make a new fucking fib. And he's gonna do it again, right? Like, it's fucking easy, right? Like, hindsight is always easier than current price action. But when you have price action that's like low-key choppy like this, and you're just making higher highs and higher lows, it's so fucking easy to trade. It's butter. Higher low, higher high. Oh my god, golden zone. It worked again. It's like he knows how to fucking trade. It's like he doesn't need to hold EUR/USD in drawdown with 8 million imaginary lots for 4 fucking weeks just to lose all of his money. Oh my god. So look, that's just all I'm trying to tell y'all guys. Now, if you want to see something, this is a chart that I try to keep updated with most of my entries that I take from Fib. Not most, all of the entries I take from Fib, which is how I trade. Here is, where does August starts right here, right? So we have 1, we have a win, we have 2, we have a win, we have 3, we have a win, 4, we have a win, we have 5, we have a win, we have 6, we have a miss, 7, we have a win, 8, win, 9, win, loss, missed, win, missed, right? I'm not going to sit here and sugarcoat it and be like, oh my god, this shit is 100% win rate. It's fucking not. No strategy is 100%, right? You can go back in the past too. I think I did a lot of like back testing for a prior video I did. Here, win, loss. Win, loss, win. There's a loss somewhere in here. I remember that it was like it was like a 75% win rate, because there are times where, like, if you get caught in like a reversal, you'll just take 2 or 3 losses in a row, but then it'll always make sense, right? It'll always end up working out. Like here, loss because price was trying to reverse. And if you were on a lower time frame, you probably could have caught it, but I was just analyzing it based on like a 1 hour, right? Win, loss, right? So I'm not over here saying, oh my god, I'm a god and no one can touch me, no one can out trade me. No, like, I'm pretty sure that was a loss too. That would have either been a break even or some partial. That would have been a straight loss. If I'm not a straight loss, but you guys see, right? All you got to do is master one fucking way to trade in one pair. You don't need 8 million fucking pairs. You don't need 8 million strategies. You need one setup, one reason that you want to get into a trade, and just stick to it. Look, I traded like 3 times this week, even though price did What did Price do this week? Price did like what, $150 fucking dollars or some shit, and I traded like three times, and I only made like 400 pips maybe. I traded twice this week. I had one loss and one win, right? My win was like 450 fucking pips, right? And the total movement for the week was $160, so 1,600. I tell everybody this a million times. You do not need to eat the pie the second it comes out the oven. You do not need to eat the whole entire pie in one sitting. All you need to do is eat your piece of the pie and go on about your fucking day. You don't need to catch every single fucking trade. You don't need to catch every single reversal the second it happens. You don't need to catch the top. You don't need to catch the bottom. With gold, it's very, very common now for gold to move $20 to $40 in a day on a normal fucking day. You don't need all that, right? I'm going to break it down for you real quick, right? Some of you people are broke, so you shouldn't even be trading. You should get a job. But if you're not broke and you have a funded account, a $100,000 funded account, and you use an average of one lot size on gold, that means you need 500 pips to make 5%. You need 1,000 pips to make 10%. You can lose 600 pips to make your 6% loss, right? That means over the course of a month, 20 trading days, you need to make 500 pips. Why the fuck are you trying to make 500 in every single week? Make 150 pips every week, and that's what? For 600 pips a month, right? There are going to be weeks where you lose. There are going to be weeks where you make a shit ton. It's all about showing up every single day and seeing if there's anything you can do. And if there's nothing you can do, saying, well, time to go play video games. Time to go ride my horse. Time to go annoy my girlfriend. Time to go do whatever the fuck you want to do except for staring at the goddamn chart all day. Me personally, you can see, I already have an alert set for above 50%. I'm honestly going to end up setting one for here too for the highs. I'll check what price does when it opens, but I'm not going to give a shit what it does. I don't care. If it rockets to the upside, okay, I got to reanalyze and see what to do. If it dumps, if it takes a fucking hour and 87 minutes to get all the way down to the bottom, okay, cool. I don't give a fuck what price does. All I do is follow what price is doing. Based on that analysis that I just said, I think price is going to make a higher low at some point and go up. Is it going to make a higher low before it makes a higher high? I don't fucking know. Maybe it says, I want to go up first and then down and then up and then down and then finally give the move. I don't know. But what I'm looking for, what the higher low area I'm looking for is 50, 61, or 786. If I don't catch it immediately, the pie comes out the oven, I don't get it when it's hot, that's fine. Wait. If I don't catch the whole move, that's fine. I still ate, right? So, yeah. It's a very long video, but it's better than 2 videos, right? So, hopefully, this helped you guys, right? Because I know people were like, hey, post your range video. Post the fibs again. So, here I am posting it again. Hopefully, y'all drop comments, drop likes. Let me know that you take some value from this information. Because technically, this fucking value is free. You don't have to be in my $100 a month Discord to get this. I'm going to post it on YouTube for free. Now, if you want to ask me questions until you fucking run out of things to type, and if you want to get my entries, my updated analysis, all that shit, then you got to pay me $100 a month. Why? Because nothing in life is free. Right? Excuse me. I don't need your money. You don't have to join my Discord. You can watch all of my weekly analysis videos and you can still get value. You can watch these free educations and still get value. But if you want direct access to me, like literally direct, you message me and I respond, you got to pay. If you want my analysis every single fucking day or whenever the fuck I have analysis, you got to pay. You want the trades I take, you got to pay. Simple. But I'm not going to fucking jump off a bridge if you don't fucking pay me. I'm a profitable trader. I don't need you. But if you need me, I need something from you. It's as simple as that for me. And I'm not going to push no fucking affiliate link. I don't give a fuck about that. Trade on NTW if you want a good broker. That's what I use. NTW. Link in the description. Or trade on fucking, I don't care. As long as it's not Shickwood Markets. Right? Or whatever the fuck they call it nowadays. Liquid. Whatever the fuck. Fuck that broker. And fuck that nigga Ryan. That nigga's garbage. That nigga negative $600,000 for the year and people think he's good. That's crazy. People be riding a nigga dick for what? Anyways, like I said, I hope you guys found some value in this video. If you did, and if you like the way I analyze, if you like the way I attempt to teach you, because like I said, I'm not a teacher, I'm a trader. Just like most of these gurus that you follow, they're not traders, they're marketers. They know how to sell you something that you want, which is a lifestyle that they're never going to be able to give you because they afford it because of you. But if you like the way I analyze, if you like the way I talk, if you like the way I am as a person, whatever the fuck, consider joining the Discord. There's a free week trial. If you think I'm garbage after a week, just cancel your fucking subscription. Simple. But as always, I hope you guys are having a wonderful weekend, and I hope you guys have a wonderful week, and I hope to see some of you new faces soon.